Good morning, guys, and happy Wednesday. Welcome to Morning Joe with me, Jim. And today I want to talk about self employed buyers, right? You're buying a home, but you own your own business, whether it's sole proprietor or you have lots of employees, right? Either way, what a lot of people take advantage of, and they should because tax laws allow for it, is taking advantage of a lot of write offs that write off against income, and therefore they owe less in taxes, right? The tax laws, I hate to say this, it sounds weird, but the tax laws have some advantages written in of things the government wants us to do, like start a business and employ people and things like that. And there's some write offs allowable for that. So if you have a good accountant, they're taking advantage of that and paying less in personal income taxes because of it, right? That's all well and good until you go to apply for a home loan. And Fannie Mae says, well, you don't show enough on tax returns to qualify for this home that you want to buy, right? And that therein lies the problem. So there is a solution to that. And that is to not do a Fannie Mae type loan, conventional Fannie Mae, Freddie Mac type loan, but rather a bank statement loan. And these are good loans. They're just different. So what the bank statement loan is you get 12 months of either personal or business bank statements, and all the deposits equal income. Well, if it's business, 50% of the deposits generally equal your income. And pardon me, sometimes a little more, sometimes less, depending on the type of business, of course. But the deposits equal income is the key. And if it's personal, well, then all your deposits equal your income. So there's no tax returns. So that's the upside. You can qualify as a self-employed business owner to buy a home, whereas even when Fannie Mae says not so much, you can't. The downside, well, it takes a higher down payment, generally 20% down on these loans, because these loans are sold to a hedge fund, right? And the hedge funds want to make sure that it's safe and secure, and they're going to get a return for their investors. It makes sense. You're a business owner. You understand the return aspect, and it's a little higher interest rate. So right now rates are mid fives. Let's say 5.5% for a Fannie Mae 30-year fixed rate. Maybe a little less, maybe depending on whatever. But let's just say, for argument's sake, they're about 5.5%. You're probably going to be in the high sixes, mid to high sixes, with a bank statement loan. So the first objection I get whenever I present the option of a bank statement loan to a self-employed buyer is, wow, that's such a high rate. And it is. But here's the alternative. The alternative is you can take less write-offs for 2 solid years. We have 2 years of tax returns, because that's what Fannie Mae requires generally, and pay a lot in taxes to Uncle Sam in order to show enough to buy a home 2 years from now. So let's say you pay a total of $40,000 in taxes over the next 2 years, wait that time to qualify for a better rate. Or you can buy right now and pay an extra $1,500 a year on that home. $40,000 Uncle Sam for 2 years, $1,500 a year, and buy right now. Therein lies the difference, right? But there is a downside, and I wanted to highlight it. But the upside is you get into a home based on your real income, right? Your income, what you're taking home and depositing into your bank statements, or what's flowing through the business. Either way works. So I hope that helps. If you are self-employed, or you know someone self-employed who's frustrated because they can't buy a home, they're being told no, there is a solution, and we can help. So have an awesome Wednesday. And if I can help with a pre-approval, let me know. Be happy to.